Okay, I'm going to try and mind map what the impact of a trade war would have on stock prices. There's been a lot of talk and a lot of chatter that the new president, President Trump, is the second he takes office, he's going to tear up a whole bunch of trade agreements like NAFTA, like the Trans-Pacific Partnership, and a whole whack of other trade deals, and just tear them up or basically renegotiate them and try to get better terms for the U.S. And a lot of people are wondering that you hear the term that might spark all this is a trade war. So what does that look like? So let's look at it from an investing perspective. So I thought the easiest way to do it, let's just pick two countries, and for ease of purpose here, it's let's pick you know Canadians, Canada, and the U.S. What would happen? So what would trade? What does trade usually look like? So in a typical trading relationship, if you're Canada, you have a bunch of goods and services you want to sell. You're going to export them over to the U.S. and they're going to buy your goods. In other words, they're going to import them. Conversely, if you're the U.S., you have a bunch of goods and services you want to sell, and to whoever, you're going to export those goods and services over to Canada. And conversely, we're going to import them. So that's trade 101. If you have something that's desirable by somebody else, you're going to trade it over, and they're going to trade something back to you. And so there's no penalties for doing that. It's just pretty much an open exchange of goods and services, and that's what the NAFTA agreement, the North American Free Trade Agreement, is all about. So that's the dynamic. That's the world we technically kind of live in. But now let's just say, for example, if Trump actually follows through on his rhetoric and actually imposes what are called a tariff, which is essentially saying that any goods that come in from Canada, for example, would be subject to a tariff. So if it's something that costs $100 in Canada, if they were trying to sell it in the U.S., they would have to pay a tariff, which, let's say if it's 20%, would cost them $120. So all of a sudden, what would happen is an impact of a tariff is going to make imports more expensive. The price of imports are going to go up, and the price of domestic goods is going to stay low. So people are going to be more gravitated to buying domestic goods. And what it's going to do is going to create an increase in demand for local goods and services. So what does that mean? If an increase in demand in local services, it means chances are you're going to see more in the U.S., you're going to see more increase in production of those goods. Instead of buying them from another country like Canada, they're going to make it locally. Ultimately, it would create an increase in jobs. If people have more jobs, they're going to have more income and more likely to consume more goods and services. And ultimately, it's going to increase the economy, amount of wealth created in the economy, and ultimately that's going to increase the amount of sales and revenues and profits, which obviously is good for stock prices. So that would kind of be the short-term impact of if the U.S. started to impose tariffs on imported goods. So, and that's really what Trump has been campaigning on, is just, I'm going to start locking things up a little bit and get a better deal because this is going to happen. But that's in the short term. So let's look at it from a Canadian perspective. If the U.S. put a tariff on goods and services coming from Canada, it's going to mean there's going to be less demand for Canadian products, which means there's going to be lower sales, lower profits. If companies are unprofitable, they're probably going to decrease the level of jobs. Unemployment would go up, and ultimately consumption go down, the economy would slow, profits go down. Ultimately, that's going to feed into stock prices, and Canadian stocks would start to take a hit. So that would be the short-term impact right here in Canada if the U.S. were to put a tariff. Now, that's all fine and good, but if this dynamic is happening, if you're in Canada and you're seeing the U.S. putting a whole bunch of increasing the prices of imports to import things into the U.S. and you're Canada and you're seeing, demand falling, sales falling, profit falling, stocks falling, unemployment increasing, you're just not going to sit there and take that, right? Like no normal good, normal kind of country or entity is going to just sit there and put up with somebody else imposing tariffs. You're going to do the same thing. You're going to increase or impose a tariff on imports. So all of a sudden, these same U.S. Goods and services that were coming over here and not paying tariffs are going to be subject to a tariff. Well, what's the impact of that going to happen for the Americans? Well, pretty much the same thing. It's going to be pretty much an instant replay. You could just take this whole element and from a Canadian perspective, let's just look at it from a Canadian perspective. By putting a tariff on there, you're going to pretty much create this dynamic all over again over here. You're going to have more demand for locally produced goods. Production locally is going to go up. Jobs are going to go up. Income and consumption is going to go up because you're going to be consuming more domestically. And the economy is going to, stabilize a little bit. And ultimately, stock prices might recover. But in the U.S., it's the flip side. All those benefits that they enjoyed by putting those tariffs are probably going to get diluted. So that's the flip side. That's the impact right away of if you're doing a tit for tat kind of tariff trade war kind of thing. So that's a really kind of short to medium term. But what about ultimately the real big issue is what's the long-term impact of all this? Well, ultimately, if you're not reliant on exports and you're going to be producing things more domestically, and you're going to need people, you're going to need equipment. Ultimately, you're going to have a hard time finding resources. There'll be an increase of demand for resources, people, equipment, or whatever, and that's going to drive prices up. And it's also going to drive prices for those goods and services. So ultimately, you're going to get inflation. And if you get inflation, you're going to get increase in interest rates. So the cost of capital goes up. If cost of capital goes up, then the value of companies is going to go down. What you're going to start seeing is really what you're seeing is you're going to start seeing capital being used inefficiently. And that long term is not good for sustaining quality of life and sustaining a strong economy. What essentially you're getting by having a trade war where you're just basically, each side just basically issuing tariffs, is you're getting really a lower quality of life, standard of living, because you're either overpaying for goods and services that are not really high quality, high value. You're essentially just creating a race to the bottom. And ultimately, if you're doing that, then that's not conducive for stock prices. So really, when you're looking at it, if Trump goes ahead and does implement a tariff, there'll probably be a short-term value for the U.S. economy. And in the short term, other countries are probably going to take a hit. But the reality is the other countries, and I'm just using Canada as a proxy, aren't just going to sit there. They're going to increase their own tariffs. They're going to increase their own tariffs on imports. And it's just going to kind of cancel each other out. But in the meantime, what you're creating is you're going to be creating situations where you're finding resources become hard to find. Demand for skilled labor, technology, and things like that is going to go up. So it's going to create an inflationary environment, which is going to jack up interest rates. And ultimately, when you're making investment decisions, it's going to lower the value of the projects and companies that you're going to be evaluating in. So ultimately, it's going to feed into lower stock prices. So, you hope it doesn't happen, but that's sort of when you're thinking through this is kind of how things shake out with respect to if you adopt a trade war, if you take on this trade war protectionist kind of policy.